Okay, so as you may have seen, SNDK has been on an absolute run. And today it actually opened with a massive red candle on an increase in volume that was higher than the opening volume from any of the past 5 to 6 days. We're currently looking at the 5 minute chart, and what we can see is that not after very long, a bottom was placed in, and SNDK began making its way back to the all-time highs of the day. And yet again, to everyone's surprise, SNDK ends up finishing higher on the day, just barely leaving anyone out of the stock who hasn't been in it as of yet. Because if we happen to look at it on the daily or even on the weekly chart, we can just see the extreme extension and how extended it's been since its breakout. We went from 280 to 500, and that's just in about 2.5 weeks in 2026. So what I wanted to do quickly is just go over some of the data storage and storage devices stocks that I have on my watch list, and yeah, some of the good ones and some of the ones that I would just be staying away from, because there are some other strong names in this sector, but names like SNDK are extended and it's best to wait for a pullback. So maybe we can identify some other data storage stocks that are not quite as extended. But first, I want to look at one of the names that I would definitely stay away from. And the saying goes that the trend is your friend, and NTAP here is definitely not in an uptrend. We have the daily on the right and we have the weekly on the left, and we are below all moving averages on both charts. That's a major red flag. So we've got the 50-day in red, we've got the 20-day in blue, and the 10-day in green, and it's going to be the same on the weekly chart as well. We're currently making lower lows, and we also had a major gap down here. So the data storage space is a really strong sector and pulling many big stocks along with it. But there are some turds in the sector that we definitely do want to stay away from. And anything in a downtrend is an absolute no-go at all times. But what about PSTG? It looks like it is below some of its moving averages here on the daily chart, with it being below the 50 and it being slightly above the 21 and 10-day moving averages. It is below those moving averages on the weekly as well, which is a major red flag. And I wouldn't be initiating any buys being below the moving averages on both time frames. But what's great here is that we are pulling back into a major key level on the weekly chart on the left. So if I just zoomed in here for a second, we can see that we are on a pretty decent uptrend on the weekly chart, and we did break through this key level of resistance here. We did a pull back in here, we pulled back in here again, and we were able to push out with an increase in volume on the weekly chart. And now we're pulling back into that key level, so we just have a textbook break and retest. However, this retest isn't ready if we're looking for a sniper entry once this pullback is over, because we are below the moving averages on the weekly, and we are slightly below some of the moving averages on the daily too. So that's not something that we want to see. But I would say that this price action does look pretty healthy as a longer term play. But for right now, this is something that will need more time. But however, this is when it's most important to have it on your watch list and pay attention, and waiting for the move to continue higher. Okay, so I have now pulled up STX on the right, and I have WDC on the left. And I wanted to show you a really quick comparison, because you might notice something about these two. They trade very similarly. They're quite alike. Looking on the left here, we can see this massive elephant candle, and you can look on the right as well. And with STX, as it is as well on WDC, we get that elephant candle, then we get that pull in for about 2 days, and then we push through. Looking at STX, you can see that it has a little bit of turbulence, a little bit more than it does with WDC, as you can see by the couple of red candles here. But WDC sort of makes it through just a little bit more cleanly. And I think the thing with these two is definitely that WDC is the better name, and STX is a bit of the runner behind in between these two. You could almost equally put these two as the two second best, because I believe we have a two first place best. We have a pair. So this would be the data center stock pair that I would put in second place, but in first place, it would definitely have to be SNDK for one, and then we have MU. And as you can see, they are much more vertical. As you can see, as they're barely pulling into their moving averages, barely getting that chance to touch it and pull back and surf. It's just anytime you get a little bit of a sell-off, it does get pulled back up. Anytime you get a little bit of a pullback, it does break out shortly after. And it's also doing it on an increase in volume. Even now we can see an increase in volume as we're at these highs here. It doesn't seem like capitulation volume, but it's definitely increasing just all through here. And that's just all through the breakout. So what we can do is wait for a breakout in the top two, which I would definitely undoubtedly say it is MU and SNDK for this space in storage and data centers. And you also have PSTG, which is pulling back on its weekly chart and simply needs some time to just fulfill this volatility contraction as it tightens up, as it fulfills this volatility contraction on the weekly and on the daily and gets ready to make its way back up. So what to do now? Best thing is to not chase SNDK, MU, keep them on the list, wait for a pullback, keep an eye on PTSG, keep an eye on WDC and STX, and wait for very nice pullbacks into the moving averages on the daily chart and on the weekly chart, and get on the boat and ride the wave. There are many other leading sectors that I would like to mention and bring up, and I intend to do so in other videos, so go ahead and hit the like button and even consider subscribing because there will be more on the way. Have a good one.